Hello and welcome to Livewire Markets. My name is Stephanie Gardner. Gold fever has gripped investors, so today I'll be sitting down with Sharkai Fan of the World Gold Council to discuss what's happening and what's behind the rally. Sharkai, thank you for sitting down with us at Livewire today.
Thank you for having me.
It's a pleasure. So we'll get straight into it. Gold's been on a tear lately. We're seeing people queuing up in the streets to buy it. What are the key drivers behind the latest rally?
So a couple of things. I think there's the broader geopolitical instability that we've been talking about for some time now, and I think that's probably going to continue. And then we have policy uncertainty coming from trade policy in the US and various other quarters as well. Also, we have this sort of long-term trend of debt sustainability in Western markets and whether a lot of Western governments can continue to pay the bills for their government spending. More specifically and more recently, we have the Federal Reserve in the US starting to cut interest rates, and of course, lingering questions about the independence of the Fed and other institutions that are important for the functioning of the US economy. And I think all those factors combined are making people turn to gold in general. But of course, most recently, you have things like a potential spat between the US and China and their trade war. I think that might have really spiked the gold price in more recent weeks.
So central banks have been big buyers of gold in recent years. What's behind that demand, and how do you think it continues from here?
Central banks have been net buyers of gold actually for 15 years now, so for quite a long time. A couple of different circumstances at play there, but most recently, central banks have been very large buyers of gold. So basically between, let's say, 2010 and 2021, central banks bought just under 500 tons of gold per year. From 2022 till today, they've been buying over 1,000 tons of gold per year, which is pretty much double what they were buying before. So what specifically sparked that? Of course, in 2022, the war in Ukraine started, but more specifically for central banks, it was the sanctions placed on the Bank of Russia's foreign exchange reserves. That meant that I think for a lot of central banks, they might have been under the impression that their official reserves were kind of like sovereign assets, like an embassy. They couldn't be violated. But that episode showed that those reserves were not beyond the reach of a foreign power. And I think that made a lot of central banks sort of think about the nature of political risk and how to handle it. And a lot of them turned to gold because gold, A, is not issued by any other country, but B, because it's physical, you can store it in a jurisdiction that might be a little bit friendlier to you, including in your own jurisdiction if you want.
So how much of gold's strength right now is about central bank buying versus macro forces, say like inflation, the US dollar rates?
Central banks continue to be a very, very big part of the gold market, and they've shown strong buying year to date in 2025 already. But I'd say that actually in this year, we've seen a lot of investor inflows into gold, specifically into gold ETFs, but also other gold instruments as well. And although both central banks and investors are responding to some of those macro factors you mentioned, I think what's really been a major force in the gold market this year has been those ETF buyers who were focusing on some of the factors that I mentioned before. Macroeconomics, yes, so weakening US dollar, lower US interest rates, but also the broader risk environment as well.
So the World Gold Council is pushing hard to digitalise the gold market. What's the vision there, and how will it change the way that investors use gold?
So gold has been around for thousands of years, as we all know. It's been a part of human civilization for a long time, and it has evolved with financial markets too. And of course, the World Gold Council is very focused on making sure that gold is ready for the markets of the future. So we have an umbrella initiative called Gold 247, which actually covers 3 different areas. But basically, the overall drive of Gold 247 is to make sure that gold remains relevant with the times, that it adapts to new technologies and new ways of trading as they start to emerge. So one major component of Gold 247 is the Gold Bar Integrity Program. That basically is essentially using blockchain technology to be able to track a gold bar from the moment it's dug out of the ground, more or less, to the moment it becomes either bullion or some other type of gold. And that can give investors assurance that the gold that they buy has been sourced responsibly and has only passed through responsible hands. So think of it as knowing where the gold came from, the provenance of the gold. And that means that you can trade this gold or hold it with the assurance of knowing that it came ethically and responsibly. There are other parts of Gold 247 as well. There's something called pooled gold interests, which is basically a way of improving how gold is traded at a wholesale level in the London market. And beyond that, we're also working on something called a standard gold unit, which helps to make sure that because gold comes in a lot of different forms, there are a lot of different national standards for gold. A standard gold unit basically reduces gold to one specific unit that can be universally traded.
So I think you might have already answered some of this in your answer just then, but how is the push to digitalize gold actually going to make it easier or safer for investors to own and trade it?
So a couple of ways that might happen. First of all, with something like the Gold Bar Integrity Program, GBI, it means that investors will have the confidence of knowing where the gold has come from, that it's been mined and processed responsibly. And I think that's a much higher degree of assurance for investors who really are focusing a lot more on this aspect of investing. Another aspect of digitalization is just broader access to gold in general. So various retail products, for instance, if they get more traction, it might mean that more investors around the world who currently don't have access to gold will have easier access to gold. Of course, in a lot of markets, people prefer physical gold, and if that's what you want, you should go buy physical gold from your local gold dealer. Others who like to deal with gold on a more sort of electronic level, digital level, they might prefer gold ETFs. But there are markets where ETFs just simply aren't available. So new gold, digital products might make gold more accessible for those investors too.
So the Australian government now expects gold to become our second largest export. What does that say about gold's economic and strategic importance?
Well, I think for one, it continues to show that Australia is the lucky country. The commodity exports in Australia, some of those major commodities have started to decrease in price, just as gold is increasing in price. So it means that the economy here will still be well supported and jobs here will still be well supported by a growing gold market. But of course, Australia is now the world's third largest gold producer as well, which means that Australia has more of a stake in how the global gold market functions. And I think that's an important role for Australia to play as well. But overall, I think it just resonates with the long-standing history of gold in Australia, the heritage that Australia has with gold. A lot of Australia's cities were built because of gold rushes. And it just reinforces how important gold is for the economy overall.
So as we know, nothing is without risk. What factors could disrupt gold's current rally, and what do investors need to be mindful of?
So this year has been honestly an astounding year for gold, up over 60% in US dollar terms right now, with something like 40 or maybe even 45 all-time record high new prices. And of course, we think that the fundamentals for the gold market remain very, very strong, and that'll be supportive of the gold price going forward. But it's not without risk. So one risk could be that because the gold price has moved up so much, it might be overweight in certain portfolios. So maybe some investors might be tempted to trim a little bit. Another risk is simply the macroeconomic path that we're heading toward. If the Federal Reserve does not cut rates as much as we expect, then that might be a headwind for gold as well. A strengthening dollar, higher interest rates typically are a headwind for gold. So we'll see how that factor plays out as well. Then, of course, I mentioned gold is strong because of these broader geopolitical concerns. If some of those concerns start to recede, that's honestly good news for the world. And then, if that risk factor is not as strong, then you might see some reduction in the gold price a little bit. But I honestly think that those factors are going to be kind of persistent.
Seems like a great time to be gold.
Absolutely.
Thank you for sitting down with us today, Xiaokai.
My pleasure.
If you enjoyed that interview, please give it a like and don't forget to subscribe to our YouTube channel where we're adding new content every single week.